Hey everybody, this is Lorelia coming to you tonight. Want to discuss the topic. The topic tonight is understanding the difference between business financing and real estate financing. So I thought tonight that would be a very good topic to really kind of dive deep into. So I just want to caution you before I get into tonight's topic, as I'm only going to discuss one area of the discussion. I'm not going to go into that deep with both. I'm going to concentrate on one, and that's primarily business financing. And so before I get right into it, as always, never want to assume that you know who I am. My name is Brown-Phillips. I specialize with helping real estate investors and business owners leverage alternative financing to be able to expand their business and do more deals. And I thought tonight would be a good topic to go into what I want to discuss, which is business financing and why the two, there is a difference. And the reason why it's a difference, and most people do not know this, and that's why tonight I want to give some clarity on the topic. Because right now in the online space, and I really only see this in the online space, I don't really see this, offline, but on the online space, it's very convoluted. Everyone has an opinion on what business funding is, what business credit is in order for a business to get access to capital. Because at the end of the day, business financing, business funding has to do with getting access to capital. And so with that being said, let me just explain to you the legality, the legal side of why it is a conundrum online, meaning everyone is a talking head. When it comes to business funding and business financing, there is not a governmental oversight that oversees the ability to provide financing to businesses. Unlike personal credit or anything that has to do with the consumer, there is governmental oversight. There's the CFPB, there's the FTC, it's the FDCPA. I don't mean to, discuss all these acronyms, but understand that those are governmental bodies that oversee you dealing with a consumer. Dodd-Frank, the list goes on and on and on. So as a business owner, there are rules to the engagement when you are dealing with a consumer. When you decide to go to the business side, and I touched on this last week, I did a private webinar where I talked about access to capital for businesses. And I touched on the differences between with FHA on the mortgage side versus with investors. And I've talked about it, here on this platform. I know I'm streaming on a few, but I'm primarily on YouTube. And I've talked about it in the past, things that a financial institution can provide to consumers versus investors. But tonight, we're not talking about the mortgage side. We're primarily talking about the business financing side. So with that being said, everyone has an opinion on how a person can get access to capital. And I'm not here to dispute whether it's right or wrong. I'm here to be, as always, a voice of reason for you to get some type of clarity in this ever-changing financial environment. Now is not the time to be confused. If you truly want to know how the business financing side works, because you want to be able to get access to capital, leverage capital, what have you, now is not the time to be confused. If no one ever tells you that, understand now is not the time to be confused. And that's why I always say whatever I share with you, you could always fact check it, only to a certain extent, because I've said this before, when it comes to business financing, different entities that provide funding to businesses will have their own financial way of what they provide in terms of interest rates, suite of services, products, or what have you. So there's never no one cookie cutter way. And that is why so many business owners are confused, because they're thinking that is just one way. For example, with business funding, you have a lot of people, business experts who will say business funding. And the only thing they're talking about is credit cards. That's as far as they can go with it. They're only talking about credit cards. But business financing and business funding consist of a suite of things. Every lender has their main sauce, their main jam of what they do, but primarily it consists of a lot of things. And so that is what people don't know. They don't know what it is that they need and how the business financing can really help their business. And I hope that tonight I shed some light and give you some clarity. So for me, what I always teach clients is that there is a business funding capital stack that I teach them. And within the business funding capital stack, you have to measure where you are as a business owner, where you are. The lowest part of the business funding capital stack are businesses that have no revenue. They have nothing. They're a startup. I primarily work with business owners that do have something. They're either real estate investors who have assets, or they run a business with revenue. And going back to the business funding capital stack, for business owners or businesses that are between 0 to 100,000, they have no income. They can't show anything. The access to capital is going to be limited. It's either going to be your personal credit. That is why for those business owners, I emphasize a lot on personal credit. And then from personal credit, you can elevate to be able to get access to business credit cards. The problem is that so many people have told startup business owners that using your personal credit is the worst thing that you can do. And let me shed some light on this. You have no proof of concept. What do you mean by that, Lorelia? You don't even know what it is that you want to do in business works. What do you mean by that, Lorelia? You do a particular thing. You have no proof that you have gotten a customer, that you have gotten a client, that you have even been able to collect $1, not even $100, not even $10. But some way or the other, you have no proof of concept. You know that there is a business out there that is doing it. You know that is the case. And that is where most people are judging their proof of concept, that, oh, someone else is doing it, so I know that this business can work. But the thing is that you haven't even proven it to yourself that it works. So now you want a financial institution to lend you 6 figures in capital, 75,000 maybe even in capital, high 5 figures, but you have no proof of concept. And for that person who's like, well, no, Lorraine, I have a proof of concept, I believe it works, then leverage your own personal credit. See, if you have a problem leveraging your personal credit, then you don't even believe in what it is that you're selling. But now you believe that there's a lender out there because some talking head online, a business credit expert, told you all you need is an LLC and an EIN and some net 30s, and voila, there's a bank that's going to, just dump all this money on. And so what happens is, going back to the conundrum, The business owners is chasing their tail. They're looking for this magic bank, the secret lenders list, and it keeps them in a state of confusion. And that's why you want to stay away from salacious business credit content. In this particular market, with all the uncertainties, things change every day. Understand, whatever you believe, whether you believe there's a recession, whether you believe it's not a recession, at the end of the day, there's always going to be people who are going to win. They're going to be able to take lemons and make lemonade. So don't buy into the hype that the sky is falling. I've said in other videos, now's the time to put your head down. Because spending time with salacious content that has you believing that there is a bank out there that is lending all this money to a business owner just because they have an LLC and an EIN. And let me just pause for a second. Be very careful of experts that are telling business owners to run their personal income through their business to give the appearance that they have business revenue. Let me tell you, if no one has told you, that is fraud. It's fraud. There is tax code and tax citations that has to do with commingling money. There are accountants out there who understand accounting that can tell you as a business owner that commingling personal with business is a big no-no. But once again, going back into the salacious content that is online, you have business owners who are doing this. And that is why you're in a constant conundrum, because you don't have proof of concept, meaning you don't even know how to get $1 from someone with this so-called LLC. So now you can't show a business that you have, a lending institution that you have some type of revenue. But someone has told you run your personal through your business, and that is how you're going to show you have revenue, and the gates of funding will fall upon you. Let me tell you, it is a good possibility it can work. Let me tell you, fraud and illegal strategies have been around longer than I've been born, and I'm 50. So they gonna be around when I leave this earth. They have been around before I was born. So there is nothing new under the sun that has not been done before. Just because you haven't got caught, just because your expert who told you haven't got handcuffs, do not believe that it's truth to it. So going back to the topic at hand. Understanding business financing. Lowest part of the business funding capital stack is businesses that do not have any revenue. So if you have no revenue, what are you going to leverage? You're going to have to leverage your personal credit. Like, I'm sorry. And yes, with a 680 credit score, depending on the mix of your credit, I've been doing videos on this topic since 2018. So things that I'm saying, I have always said. I'm very consistent. I've talked about the advantages of personal credit. I have talked about the advantages of playing the long game. So nothing about this topic that I'm talking about tonight is new. But what I want to bring home to you is that You have to have something to leverage, because all you're doing is wasting time. There's business owners who reach out to me because I don't do a lot of access to just talking to people all the time no more. And they have nothing. They once again, no proof of concept. And so they're either trying to invest in real estate, goes back to the topic at hand, the difference between business financing and real estate. They want to invest in real estate. And they have heard sound bites online, sound bites of leveraging business credit to invest in real estate. In 2020, I came online sharing those strategies. Most of the people that you listen to today may have just started talking about it last year, 2022, or what have you. Now, I'm not going to say I was the only one talking about it, but the proof is in the documentation. You can go to my YouTube video, and I have always talked about leveraging business credit to invest in real estate. But this is the difference. And this is where I'm going to talk about with real estate financing. Real estate financing has to do with you getting a mortgage. Depending on what type of mortgage, it depends. You may want FHA, you may want some investor loan, you may want to fix and flip, you may want to use hard money. The list goes on and on and on. Commercial, what have you. There's a laundry list of things that fall under real estate real estate finance. Same way with business financing. There's a laundry list of things that fall within business financing. But what happens is that, and this is once again the conundrum, and this is why I started talking about this topic in 2020. Anyone who's ever worked with me or have really listened to my content, I have never instructed people to try to buy real estate with a business credit card or with business credit. Because I always teach clients that business financing, business funding is one piece of alternative lending. And depending on what market you're in, because you can be in some markets where real estate is cheap, under 50K. I recently did a video not too long ago talking about a particular real estate deal that I was working on. And because of the size and the low amount, a credit card can pay for that. A line, access to a line of credit. But this is where strategy comes in. You have people who are real estate investors. That's their jam. That is what they do. They all day, every day, whether they fixing and flipping, buying multis, doing whatever it is, whatever Airbnbs or whatever, that's their jam. And they have taken what it is that they do and may have used a business credit card or some type of form of business financing. They may have not used real estate financing. Or whatever the case may be, they did it that particular way. That's worked for them. The problem that I see come up is that people don't understand the strategy, the real estate strategy that it takes for them to do the deal leveraging either business financing or real estate financing. They really don't know. They don't know if the two should be combined. They don't know if they should just get one or the other. Because what happens is that the real estate expert told them the way they did it. And it probably worked wonders. But because they're not in the space every day, they don't know that sometimes you're not going to use business financing for particular deals. You just not. So that's why I always ask people, well, tell me something about your real estate deal. And they don't know anything. They can't explain nothing to you. Once again, no proof of concept. They don't know anything. They just know, once again, the salaciousness of what they heard, and they heard a sound bite, and now they need some clarity on what it is. And that's why I'm doing this video, because business financing is not the same as real estate financing. A lot of people don't know the difference between the two, which is why people are stuck in a conundrum. And what I was saying previously about in 2020, when, I, came online on a more, how should I say it, a more amplified way. Been talking about it since 2018. My messaging got really amplified in 2020 because I was using marketing methods that allowed me to amplify my message. And so the point that people don't understand is that the strategy behind using the financing matters. The strategy behind the financing matters. The outcome of what happens with that strategy matters. And the in-between bridge is the financing. That's the part that your expert, your real estate expert, or your business credit expert is not telling you. So most people are trying to take a cookie cutter approach with whether it's business financing or real estate financing. They're trying to put it together. And this is what I tell people, usually find the person, or go back to the person that told you this method of being able to leverage business credit or whatever they told you, and have them to show you. Hold them accountable. Have them to show you. Because once again, most people are in a cycle of they really don't know. And once again, in this season, in this time period, you don't want to be confused, because this is not the season to be confused. This is not the season. And there's a lot of people who are taking sound bites, and they do not know the methodology of why they're doing it. That's it. They don't know the methodology of why they're doing it. So what I explain to my clients with the business funding capital stack, the lowest level being a business owner, 0 to 100K, proof of concept really is not determined. They have no actual revenue. You're going to have to leverage your personal credit, as much as people don't want to hear it, because the people that I work with, they want speed. They want speed. And if you value your time, and this is the difference, once again, with the type of business owner, the strategy. A business owner who has no revenue in their business, or maybe they're a real estate investor, they have never did a deal, they got all the time in the world to go all over the internet, listen to every live stream, download every free report, try to run the play themselves. They got all the time in the world. And since they have no proof of concept of what it is they want done, that they want to do, now they want someone on the internet to prove to them that what it is that they want to do is possible. Because remember, they don't value their time. And so many of them have been sold that, oh my God, using your personal credit is the worst thing to mankind. And my answer to this, because once again, I'm a big advocate of, one of the foundational principles when I work with people is stewardship, being a good steward of your money. Because this is what I know. If you are concerned about using your personal credit because you think you may utilization can be high or your credit score will be lower, this is it. As you pay down, if you have to leverage your personal credit, you pay down your credit score will eventually, it does go up. Because remember, you signed your John Hancock's, your signature on the dotted line of a financial application saying that if you loan me X amount of money, I'm going to pay it back. And if you really are truthful that you are going to pay it back, it doesn't matter if it's personal or business. Like, there's no way that, oh, I'll pay my personal, I don't want to mess with my personal, I only want business. And then that raises a red flag, because then that has me to think that, oh, I know you think that since it's a business, you not responsible for it. So if you just happen to just fumble the bag, you think you can walk away. Let me tell you, ladies and gentlemen, and this time and space of financing, if there's no lender that is going to lend to you, and that's even if you have revenue and you're not going to personally guarantee the loan. Just last week, I talked about a new business line of credit product for business owners, where you can, get up to, I think, 250,000 line of credit. You just pay on what you draw down. Terms are very reasonable. I did a comparison of a home equity line of credit versus you getting a business line of credit. Why now in this, in this market with rising interest rates, you want to be able to have funding arms available that you can pull down on. And although the terms were very reasonable, wasn't nothing crazy, the lender for that particular product wants to be able to put a UCC lien on your business. Ooh, I know one may say, oh, I don't know about that, Lorelia. I don't know. Yeah, that's not uncommon. That's not uncommon. Like you that's what I'm saying, salacious content. People who are telling you that lending institutions are going to lend you all this money and you think you could just skedaddle away, you could just walk away from it because you didn't do a personal guarantee. Good luck with that. So here you have a lender where the terms are favorable, the interest rates to pay on the money that you draw down, and I did a comparison, it's cheaper than a HELOC, you doing a refinance or anything. I did this comparison for real estate investors. And if you're a regular business owner, it's available to you too. But of course, the caveat is, yes, you do have to do a personal guarantee. Yes, it is recourse. And yeah, they're going to do a UCC loan on it. I mean, a UCC lien on it. They are. Because see, what people don't understand is that as you get higher up the food chain, once again, the business funding capital stack, I didn't even discuss all the other levels. As you get higher up the food chain in terms of funding, yeah, you can go non-recourse. Because there's other things that lenders are looking at. But once again, you may not be a startup. You may have some, revenue in their business, because I think they lend, that particular lender for that business line of credit starts at $100K. And they usually do 20% of revenue. And so, I mean, pretty much that business owner got to be almost at like, what, $1 million? Because 10% would be 10, 20. Yeah. So $1 million. So that's a business owner that's doing $1 million in revenue. And they still want to put a UCC lien onto the business. So that's what I'm saying, like, as you mature, and that's really what it takes. There's a level of maturity that you as a business owner or real estate investor has to have when it comes to lending. You can always tell the maturity level of a business owner based on them thinking that there's a make-believe world of lenders that's just lending money out. And unfortunately, and I hate to say this, that only appeals to people who really, once again, they have nothing established. So they want to believe that there is a pool of money, and don't mean to offend no one, but that really is what it is, because business owners who are running businesses, imagine the business owner who runs let's say a tax business. They have staff, they have payroll that they have to make every month, and they're looking for some working capital or a line of credit that they can have access to be able to continue operations or get operations ready for tax season. Or how about they just need to meet payroll? You really think they got time for somebody telling them, well, I'm gonna do some net 30s, and we're gonna look at a secret lenders list to get you this credit card? Like, come on. Somebody who's running a business. I just told you about the business line of credit. The amount of income you have to be is 20% of what you bring in. You think a business that's bringing in $1 million is listening to somebody telling them they got to build some net 30s and all that? No, because they understand their time. So they are concerned with, what is the fastest way that I can get access to capital to keep my operation running? Hence, that goes back to what I've always talked about since 2018. Personal credit will allow you to skip the line to be able to move forward in your business credit journey for the startup. So for a startup to spin their wheels, not trying to, the time that they spend looking for this fruitful pot full of money that doesn't really exist, they can be working on their business, leveraging the credit cards they currently have. And I know this is not a conversation people want to hear, but if you really believe in what it is you selling and you think it's going to take off and it's going to make all these millions of dollars, then bet on you. Well, bet on you. And the same way with real estate, because most people don't have proof of concept. So they don't know if they need real estate financing or if they need business financing. And they've heard sound bites on the internet that have left them dazed and confused. And I hope this video has gave you some clarity. I know I've talked about a lot of things, and I touched on a lot of things, but it's to bring clarity on a very convoluted topic. Because once again, business financing consists of other things besides just business credit. That's really the jargon that's really online. When I'm in circles amongst people offline, they understand that they may not know everything that's within a business financing suite, but they also know that there are other things that they can consider. So be very careful of people who are telling you, using terminology of business funding and alternative lending, and as far as they can go is credit cards. That's just as far as they can go. They can't go no deeper. Once again, it goes back to the real estate investor or the business credit expert that invests in real estate, and the way they did it with credit cards. But once again, that's as far as they can go with it. They can't go no further. It's not that it won't work, but it goes, once again, what other options do I have? Nobody just wants one option. What other options do I have? Because once again, for the mature business owner who has revenue in their business, they have a proof of concept, meaning a business that is generating money. They can show financials. That particular business owner wants options. Or they could be a real estate investor, they own property, or they have, or they have a business, a real estate business that may be doing fix and flips, and they're able to show, on financials, how many fix and flips they did, how much they generated, or they could be an Airbnb owner, how much revenue they're bringing in, a multifamily or what have you. They're able to show that. Once again, there's options, not just one option, meaning just business credit cards, not just that one thing. And that's really as far as people go. It goes back to the example. If I know I want to execute on a real estate deal ASAP, you telling me I got to now wait about 3 or 4 months or maybe 6 months to a year to do some net 30s and then elevate to this tier and then elevate to that tier, when I can there's a process that I can just skip in front of the line, because there are lenders who will lend to me based on me as a credible person or a business that is a credible business, because I have those things that I mentioned. I have financials, my business proof of concept, because it is bringing in revenue, it's bringing in income. There's other options for me. So I hope this video, as always, has given you some clarity. I'm also streaming this as a podcast. And so underneath, if you're watching the video, there's going to be some links. Maybe you're listening to it on some of the podcast networks. Please leave me a comment, rate it. Let me know what you think. We're everywhere now: Spotify, Apple, iHeart, Amazon Music. And understand, here on YouTube, this is just one platform, video platform, but we do have the audio versions that do go out on those particular podcasts. But as always, hope this video has brought you some value, or if you're listening to the audio, hope it has brought you some value. Leave me a comment, rate it, let me know what you think. All my links will be below this video. And as always, talk to you in the next video. Okay.